Hello everyone and welcome back. Today we're going to be doing how to start investing, and this is more for beginners. So I would like to say thank you very much everyone for the continued support. If you could leave a like and subscribe, that would really help the channel out. So just a wee disclaimer, the information presented in this channel and in the videos is only intended for entertainment purposes. Please make sure to do your own research. So I've been asked by a lot of friends and family, how do you start investing? So this is going to be a beginner's guide to how to start. Okay, so we'll jump right in. So the first thing you need to do is make sure you're ready to start investing. So the first, these are 5 key things that you need to take into consideration. There will be more. As we go through the video, I'll point out some little things that you should probably keep in mind before you start. So the first thing is you need to pay off any high interest debts. So this is credit cards, loans, mortgages aren't included in this because they're not high interest, so anything that's going to make you lose more money than you're going to gain from your investments, you should pay them off first. The second thing is only invest money you can afford to lose. So don't go and invest money that you need for buying your shopping or paying off bills or anything like that. Only put money in that you can afford to lose because you may lose it. That's just the nature with investing. The third thing is, you won't get rich overnight. You really won't. This is a longer term game. Maybe be looking at a decade, or investing for your kids, or if you're in your early 20s, maybe 30s, 40s, you'll be looking at your retirement maybe. So the other thing that you need to look at is your tax. So you need to use an ISA if you're not already to avoid tax, and we'll jump into that a bit later on. You also need to have a strategy, which we'll jump into as well a wee bit later on. But basically what I mean by this is you can't just fire your money into any stock and expect it to do well. You need to do a bit of research. You need to know what you want out of your investing journey. Okay, we'll move on. So you need to firstly decide what platform to use. So I've given a selection of ones that I have previously used. I've put them in a list of ease of use. There are others like Hargreaves Lansdown, Lightyear. Lightyear's on the list. There are other ones that are bigger maybe, but these are for more experienced investors with a lot more money. And you will come across these as you continue your investment journey, and you can always start a ISA or an investment account with one of these, and then in the next tax year or start an investment account with another one as well. So what you need to have a wee look at what you want. So ease of use is Vanguard, Trading 212, Free Trade, Lightyear, eToro and Webull. I have used all of these, not as ISAs, but I've used their investment accounts. I like them all. eToro I've only recently just had a look at. I've never properly used, but it seemed quite, you would need a bit of knowledge before you started using it. So Vanguard is who I took my first ISA out with. These are great for ETFs and things that will come along to a wee bit later on. Trading 212 is who I use at the moment. Very easy to use, very low fees. Free Trade does what it says on the tin. Free to trade. However, there are limited stock options. You can't have a lot of stocks. They're limited, so you'd need to buy the premium before you can invest in all the different stocks that you may want to. Lightyear, fantastic. However, it's a wee bit more complex to use, I would say. However, still a great option. eToro, as I said, and Webull is for your more experience, maybe once you've been doing it for a wee while, and you can only invest in US stocks at the moment with the Lightyear UK account. So this may cause problems if you're wanting to invest in BP or Shell, which are listed on the UK stock exchange. Okay, so general investment accounts or ISAs. So general investment accounts, these are taxable accounts that stocks and shares can be bought within. You can put any amount of money in here. However, your capital gains tax will be affected if you sell any shares and make a profit from them. Your dividends will also be taxed if you earn over a certain amount or your dividends are over a certain amount. Individual savings accounts, these are ISAs, and they're in the UK. Residents can save up to £20,000 per person each tax year. This means that the money within isn't subject to tax. So cash ISAs, stocks and shares ISAs, and lifetime ISAs are the three sort of main ones that you'll come across. However, we would be talking about the stocks and shares ISAs. Just keep in mind, the £20,000 is overall over all three ISAs, and you can only open one each year. Lifetime ISAs, you can only put a maximum of 4,000. If you want me to do a wee video on that, I will in the future. Just leave a wee comment below and I'll get round to it. So you can only put £20,000 in your cash, stocks and shares and lifetime ISAs each year, and you're only allowed to open one each per tax year. Okay, so what to invest in? So this is the big question that everyone wants to know: what's going to be going up, what's going to be going down. Stocks and shares are very risky. So first off, I will talk about ETFs. So these are collections of stocks that are bought as one, meaning that the risk is spread. So ETFs are basically the S&P 500 here. It is the top 500 companies within the US. The FTSE 100 is the top 100 companies in the UK. So that means if you put £100 into the FTSE 100, it will be split £1 into each of these stocks. And that means you're spreading your risk over different sectors, different stocks, meaning if some do well, you'll profit. But some may not do as well, so they will eat into this profit as well. However, it's better, in my opinion, than going all in if you don't know what you're doing on stocks, because you may pick one that may just go to zero or lose a lot of value. So individual stocks are just individual companies, meaning that there's a higher risk, but there can be a higher reward as well. So like I just touched on there, this means that individual stocks are like shares of like Barclays Bank. However, if the interest rates go up like they have, and there's not as much or there's more money coming in, the stocks might do well. However, if something happens and they get regulated or something like that, the stocks will start to plummet. So you need to be aware that the stocks can move up and down a lot quicker than what ETFs do. Not saying that ETFs stay stable, but they don't. But they do stay a lot more stable. REITs are real estate investment trusts. These are property stocks with they have a larger dividend and pay out more. However, they're not doing very well at the moment because interest rates for banks have went through the roof. This means that it eats into their profit, meaning their stock price drops. I've also done a full video on REITs, which I will put up at the top of the screen. So you can have a look at REITs if you would like to have a wee look at that. And I'll also be doing videos on what ETFs and stocks are as a whole. I'm going to try and do a wee series of what different beginner investing terms are and what they're used for. And yeah, hopefully that helps everyone out. So, research. Firstly, you need to do research on what you're going to be buying, what you're not going to be buying, what's good, what's not. So the main ones I use are watching YouTube of people like myself who show their portfolio, say what they're buying, say what they're selling, things like that. I'm in it for the long term, so I don't really sell anything. I only buy, but I try and buy at a good price. I follow investment accounts on Twitter, or X as it's now known, or Instagram. So this keeps you up to date with things that are happening daily, and it gives you a wee snippet of what's happening, so you're able to look in and have a wee look and do a bit more research on it. Google is fantastic. If you need to know anything nowadays, you put it in Google. So if you need to know what's happening with Apple stock, put in Apple stock, and it will give you plenty of news articles, what's happening with the stock price. It'll show everything on it. which is very good, and it means you can get a quick overview of what's happening and make your decisions. Listen to podcasts. There's investing podcasts that are fantastic that you can Google. If you need any, leave a wee link, leave a wee comment in the description, and I will list some for you. Or if you have any suggestions, put them in the comments below. Read news articles, like I just said, from Google, but you may also prefer to buy the Wall Street Journal, anything like that. And sign up for newsletters. These can be published weekly, daily, whatever it may be. Turn it on and they send you an email. You turn on a wee thing on a lot of websites, and they'll send you a wee email, and you decide what you would like it to include. And these are really good for getting wee snippets. If you don't have time to read them, you can just read the headlines and see sort of what's happening each day. So this is fantastic for research. You need to make sure you do plenty of research beforehand. Okay, so a wee recap. Make sure you use an ISA if you can. If you're in the UK and you've not already used your £20,000, make sure to use it, because this avoids tax. Make sure you use it for your first year anyway. Make sure to use an easy to use platform, because you want to be able to have something that you understand and is easy to buy and sell and easy to monitor. You don't want something that's very complex and it puts you off. Also, make sure to do your own research. We just talked about that. Make sure you do your own research, because you need to make sure that it's what you want to put your money into, because everyone else may think this is a great idea, but you don't. So you need to make sure to do your own research. Also, stay up to date on the current market. So this comes into sort of research. You need to make sure that you know what's happening weekly, maybe daily, depending on what you choose. Make sure that you're reading and updating yourself and watching more YouTube videos, or keeping up to date on Twitter on what's happening in the markets, because they change very regularly. Okay, so the two that I really recommend that I have used for my two ISAs is Vanguard. I used that for my first year, and I used it for ETFs. I invested in S&P 500, FTSE 100, and all world high dividend yield. These were great. I still have these. I think I have about 20,000 in that account. Fantastic. Very easy to use, and very small fees. Very little. Trading 212 is who I use this year. It's used for ETFs, REITs, and stocks, so you can buy anything you would like on it. It has both a general investment account and an ISA account. It has very little fees. This is what I would recommend, because it's very easy to use. You can put your money in and out with bank transfer. Fantastic. So everything that I have mentioned, I will try and leave links to in the description below. Any sign-ups, if you could use these, that would really help out the channel, because I get a wee percentage whenever you sign up as well, and it really helps the channel keep going. So without further ado, just to say thank you very much for supporting the channel and watching this video. If you could please like and subscribe, that would be fantastic, and there is another video shown here. So I hope this helped, and I will see you guys in the next one. Thank you.